Yeah, let's start with talking about the relevance for banks into that identity question. I mean, we all operate based on the foundation of trust, and we have over the decades and the centuries actually provided that trust. And I think now when we have a digital world where we do most of the things in our daily lives digitally, we need to prove our existence and identity in a very safe and secure way. And then, of course, the banks have a role to play. And what we discussed in the paper is around what sort of verified credentials are we talking about. We are addressing in the discussion things around, will we see driver's license there? Will we see student certificates? Will we see vaccinations? Will we see diplomas of certain degrees? All of these things could be proofs that could be verified data. So we believe that the notion of identity will become much broader in the sense of how it will be then operated into a wallet.
Marina, Kristian, Cedric, thank you so much for joining us. It's a pleasure to having you all here. Before we get started, just very briefly, can you please tell us who you are and what you do?
Yeah, sure, I can start. I'm Marina Repo. I am one of the co-chairs here in the Mobey Forum Wallet Expert Group. And my day job is, of course, at the bank, Nordea Bank, working as head of commercial management in transaction banking. Nice to meet you.
Thank you, Marina.
My name is Kristian Sørensen, also co-chairing the Mobey Forum Digital Wallet Expert Group. I've been with Mobey Forum for close to 15 years now, and following the organization's work on mobile and digital wallets throughout all those years. And my day job is as the digital wallet strategy lead at Nets EID Solutions.
Thanks, Kristian.
And my name is Cedric Sieber. I'm, I guess, the last of the co-chairs of the Wallet Expert Group at the Mobey Forum. And my day job is customer journey owner for everything payment related for our private customers at PostFinance in Switzerland.
Wonderful. Okay, so let's get started and let's talk a little bit about the report that Mobey Forum recently released around the future of wallets. And the first question that I have is that the report proposes redefining the definition of what wallets are and what they're used for. I'm keen to understand what prompted this new definition and what does that signal about the evolving role that wallets have in financial services in general?
Yes, basically what we are saying in the report is that we see now wallets going beyond payments. And what was then happening 10 years ago was that banks gradually started to have host card emulated wallets, and there was attempts being done all through the European space. And then we also saw that there was a shift into the X space with enrolling the cards into the global players' wallets. And then now we see that we have also evolved into more account-to-account based payments. But more importantly, I think that we also see that there are other things, as I said, than payments we are looking into, which we'll come to later on in this discussion, looking into the role of the identity and the role of the central bank digital currency. So basically, when we say then the new definition, that is, a digital wallet is an interface to interact with and manage verified data and digitized assets. The verified data and digitized asset part of that one is exactly about the identity.
And I might add, we also wanted to make it like a little bit more future-proof, because 10 years ago we were very mobile-centric, I guess, in the definition, and we are now entering a world where a wallet can inhabit any space or any medium. So that's why we are shifted towards like digital wallets in general now, and not specifically mobile wallets anymore.
And maybe it's fair to say that it wasn't because we lacked imagination those 10 plus years ago when we first started looking into mobile wallets, and actually we outlined all of the use cases that we now see unfolding. But the fact that it took us so long to get the actual payment part of things working, that sort of took focus for many years. But now the infrastructure, the technical development, and also the regulatory frameworks are in place to also expand the digital wallets beyond simple monetary transactions to to play a central role basically in any digital transaction that needs the security or exchange of assets of any sort.
Okay, I find this really interesting. I think we're all familiar with the fact that almost all banks today offer a digital app, or a mobile app or a web app where people can go into the bank and perform certain transactions. And as consumers, we've become used to that interface. But now we have wallets in the space. So can you help me understand what's the difference between the banking app and a wallet? And maybe also what are the challenges that banks are facing when having to deal with these two different channels through which their customers access their services?
Yeah, that's a really good question. And I think what we have seen in this work is that the majority of the banks, they are having the mobile banking app more or less as a financial control tower where you manage your daily sort of financial well-being. And if you compare that to actually having a more payment-oriented function, when I go and shop my items, I use my wallet to pay for the items, etc. Should it be online, should it be in the store or whatever? Those are, in many cases today, different types of apps. So that's why we bring up these strategic options for banks and say that one important aspect here is the interoperability. We realize that it's difficult to have one ring or one app to rule them all, like we say. We believe that there will be in the future multiple apps for different use cases. And the other thing that we also say is that this notion of adapting to new emerging trends like the embedded finance or embedded banking is going to become more and more important for banks, because wallets are merely only a container and you can embed whatever payment instrument or feature into that one. So that's also one thing that we are reflecting on in the paper.
And I guess one of the challenges specifically for banks is that you have like those two sides of a coin, right? You have very complex financial transactions which have to take place in your usual banking environment. And then you have to have a wallet offering, which has to have the goal to be as least complex as possible, to make it as user-friendly as possible. And to merge those two worlds at the moment is rather tricky, because the end consumer is not used to go to, I don't know, for example, open up his e-banking app when he wants to pay at a local store or in the online shop. And those are like bridges we have to slowly but steadily build and try to merge them as good as possible.
And there is probably not just one solution or one version of that, those scenarios, because it also depends on cultural context. If you like to open your banking app to do a payment, or if you rather have these things separate. And we've seen different implementations across different countries. But regardless of which way you go, there is no doubt that the digital wallet will become a high-frequency point of interaction, and that is why it becomes of increasingly strategic importance to the banks now that they have the success with the mobile banking apps, but they do not have the high frequency of the payment wallets of Google Pay and Apple Pay, etc. So there is an opportunity for banks to play a strategic part by entering this space of the digital wallets now, or re-entering.
I guess the key word there is, like, as we said in the definition, is the interface in the end. The wallet is the interface. What it taps into is pretty much up to the imagination of the service provider or the banks in that matter. But also, as Kristian said, there are way many more factors that enter into that calculation, especially coming from like risks and security aspects, which doesn't make it as easy as you might think to just put out an easy-to-use wallet as a bank.
Does that mean that we will see a proliferation of wallets coming up from financial institutions as well as other types of service providers in other industries?
The short answer is yes, most definitely. I think we already see that, because we see merchant wallets emerging. We see transit operators wallets emerging. We see maybe not in real life yet, but we see all the talks about central bank digital currency, which will also require wallets. We see crypto wallets. So the proliferation is definitely already happening.
Yeah, but I think it's also important to note that for a long time, banks have already sort of embedded their cards into the X space. It is actually the cards issued by the banks that are used in these wallets. So there is already a partnership there.
Indeed. Now, I often speak to people in the open banking space, and what I keep hearing from proponents of open banking and open finance is that we're only just scratching the surface with regards to the level of innovation and transformation that these technologies could bring. How would open finance in particular impact the development of wallets?
I guess it's a vice versa relationship, because what you can achieve with wallets, and that's, for example, what we see in Switzerland. I mean, we have a local champion which is called Twint, and over 6 million people within Switzerland use Twint, hopefully on a daily basis. Already coming from a population of 8.5 million people, that's quite an achievement, I'd say. And to have that basis to probably provide in the future, the possible scenario for the future, a unified open banking platform for each relevant Swiss bank, for example. Not that I'm saying that we're going to try to do that, but it could be an option there. It's something that I don't know, doesn't come as easy, I guess. And so I guess you can look at the calculation from both sides. Does wallets impact open banking, or is it vice versa?
Yeah, I think we also mentioned that the embedded finance element is of interest, because as a bank, you could power different wallets. You could decide whom to power and in what way. Banks usually often have the large balance sheets and are able to then provide financing options, etc., and so forth. That could be valuable to other players. We also, in the report, had a discussion on this notion of what is hyper-personalization going to be in the future. And on that note, we might not go as far as we have seen in other types of regions in the world, for example, in Asia, where we have a lot of things paired into one sort of app. But here we could look into, are there future loyalty elements that could benefit the consumer with a consent-based approach, etc.? Of course, everything is around the privacy and also the consent here, but we also realize that loyalty is something that could be of interest to the consumers in the future, and that could be then embedded into a wallet.
Exactly, and I think that highlights the point that even though we've talked a lot about embedded finance, embedded finance can probably be many things. It can be financial services embedded at the merchant side of things, so that whenever you want to buy some larger items, there is a financing option. And there, the digital wallet could help you easily onboard to a financial institution that you've never dealt with before, because you have your identity credentials in your digital wallet, and thereby easily onboard with that provider. Or you can have embedded finance into your wallet, so that you basically bring your own financing options to whichever merchant that you're dealing with. So there are different scenarios that could play out, all with the wallet as an enabler of these services.
All right, this is all very exciting, and I've picked up already from the conversation so far that each one of you has mentioned something in relation to identity. So I'd like to take the conversation a little bit towards the EID. ADAS, I never get this right, ADAS or EIDAS, whatever that's called, the 2.0 that was recently announced by the European Commission. What role do you think that identity will play in ensuring that there's a broader adoption of wallets within Europe?
So let's start with talking about the relevance for banks into that identity question. I mean, we all operate based on the foundation of trust, and we have over the decades and the centuries actually provided that trust. And I think now when we have a digital world where we do most of the things in our daily lives digitally, we need to prove our existence and identity in a very safe and secure way. And then, of course, the banks have a role to play. And what we discussed in the paper is around what sort of verified credentials are we talking about. We are addressing in the discussion things around Will we see driver's license there? Will we see student certificates? Will we see vaccinations? Will we see diplomas of certain degrees? All of these things could be proofs that could be verified data. So we believe that the notion of identity will become much broader in the sense of how it will be then operated into a wallet.
And to your question on eIDAS, that is an example of where regulators will help us accelerate that development because of these new requirements for all EU member states to issue a digital identity wallet to its inhabitants. And as we have seen in the Nordics, where some of us are based, having a properly functioning digital identity infrastructure is a major catalyst for digitization and thereby a major catalyst for economic growth. And I think that is one of the last things that we really need to get into place in Europe to have a fully functioning inner market. We have open borders and inner market for almost everything, but identity doesn't travel as lightly as many other services. So there's no doubt in my mind that the eIDAS regulation or eIDAS 2.0 will have a major impact, and it will, since it's very wallet focused, have a major impact on the wallet development in and across Europe.
And I guess maybe if I add, it will have a major impact on various levels, I guess, especially coming from a bank side as well again, because we all know already we will have to be able to interact with those digital information in the near future, but maybe there is also a possibility to go into a way more active role, depending on which region or country you are in terms of providing solutions to that issue, and maybe become an issuer of such credentials or wallets that can inhabit those credentials. So I guess EID brings interesting times.
And also just adding further to that point is that it's important to remember that EID is both an enabler of digital services, that you basically use your digital identity to unlock various services, but it's also, EID is also a digital asset in its own right, and it's a very, very precious asset, because as much as I hate to lose money, if somebody else loses my money, I can be made whole by getting the same amount. I don't care if it's other money, as long as it's the same amount. It's a completely different situation when we talk about my digital identity. I don't just want another digital identity. If somebody loses it, I want my own digital identity, and I don't want it compromised. So that means that the whole management of our digital identity is an extremely important infrastructural and trust-based factor that we have to take into the strategies of banks and service providers across Europe.
Yeah, no, absolutely. I think there's still a long way ahead of us, but it's really interesting to see how these building blocks start coming into place. And Marina, you mentioned just a while ago, you were talking about how in Asia things have evolved slightly differently, with the emergence of these super apps that are basically gateways towards the digital lives of most people in countries in Southeast Asia or in China themselves. That prompts me to think, how can local wallets, and in this case, like perhaps wallets that are issued by banks, how could they compete with something that is perhaps more pan-European if it was to emerge?
Yeah, I mean, what we say here in the report is that we believe that the wallets that are existing in a region needs to be interoperable. And if you have a local wallet, a local champion that is very strong in certain use cases, for example, let's play with the account-to-account payments, then we believe, of course, that the consumers will use that wallet for that purpose. And then, of course, if you have global wallets that are extremely strong in the user interface on the card payments, then we believe that one will use that one for those purposes. And then if you, for example, have in the future with banks somewhere in the European space or the global space, a wallet that needs to be tied then to the financial well-being of that individual, so that there are different sort of, you could say, value propositions that are appealing in the different wallet use cases. That's why we believe that we are not seeing one wallet issued by one player to rule them all, so to say. We believe that these wallets will live in much coexistence.
And the end consumer usually has preferences depending on which use case to which wallet or service he usually goes. And if we bring it back like to the local champions, as we call them, if you look at those who are most successful, is what Marina just said, just start with a value proposition which like the big ones usually can't so easily fulfill. So the P2P payments are a good takeoff point. And once you established your fan base, so to speak, slowly shift into other use cases and then try to, get your share of the cake, so to speak, in the normal P2M use cases. Proved to be not the worst strategy to have as a local champion.
And I think if we look beyond the exchange of monetary assets, I think some of these bigger platforms may find themselves not having the degree of trust with consumers as banks do. So, you can ask yourself that, okay, you're probably fine having one of the big platform players service your card payments because you know that the bank that issued that card is responsible if money is lost. But would you trust one of these big platforms with all of your university degrees or the deeds to your house or your financial or your medical records? Would you exchange those on a global platform? I'm probably not so sure. So I would lean towards the strength of the trust relations that especially banks have, but not only banks, but especially banks have with consumers.
Yeah, absolutely. And I also keep hearing that we've mentioned the term embedded finance several times in this conversation. So my next question is, what role do you think that this new definition of wallets will play in continuing the integration of financial products into non-financial platforms?
Personally, I think it's a major opportunity for banks to distribute their services much more effectively, because most people could get a much better deal for financing from their existing bank, because that bank has the data to make the proper credit scoring, than they would do from a third-party financing company if you go to buy a sofa or a big screen TV or whatever. So, but I think one of the reasons that the banks have not yet on a major scale jumped at this opportunity is because the distribution and the onboarding has been too difficult and too costly. It has been too difficult and costly to onboard a potential client for a very, very small loan. But in this way, and with digital identity in place, you can do it much more effectively. So I think it's a major distribution opportunity for the banks.
Yeah, I cannot do other than echo that, absolutely. And I think also in the B2B space, there will be a lot of opportunities, of course, looking at platforms where banks can power lending, etc., to customers that are corporates and so on and so forth. And we are also going to look into merchant wallets in this group that we are having. So we will, of course, have a series of different topics that we will look into, and merchant wallets are one of those. But on the embedded finance topic, I definitely believe that we need to also rethink the definition of relationship between the bank and the customer, the end customer, because I believe that we will have much more relationships now with new customers that are meeting the bank the first time when they are actually doing the commerce in a third-party interface. So that's why we need to look into the customer definition.
And I guess also banks have to have some kind of like maybe ego check when it comes to that, because the future customer maybe doesn't even know that he's in a relationship with us. But it can be a win-win in the end, because I have the better offer and the bank has the customer in the end. But we are still like very classically thinking in terms of the customer has to know it's me. I have to be close to the customer. And I guess that's going to shift more and more if we go into that interoperable, platformized future, I guess. Yeah.
This is fascinating. So this interoperability that we expect to see will basically continue to blur the boundaries between industries, and perhaps even disintermediate the customer from that facing relationship with the bank, right?
Definitely.
It has the possibility to, absolutely, yeah.
Fascinating. Okay, maybe just one last question before we close our chat for today. In the report, you make several recommendations, strategic recommendations for how banks should think about developing their wallet, their digital wallet strategy. What do you think would be the biggest struggle for banks, or which one of your recommendations do you think will be the biggest struggle for banks to adopt, and why?
Just maybe go around the table around this one, and just to start with what the considerations that we propose are. First of all, we are saying that of course the banks needs to establish the strategy that they want to take. How and what ambition level do they want to take when it comes to wallets? And once that is established, we also see that there is a notion of collaboration that we need to establish. We are not able to, as a one sort of a company, to do it all alone. There needs to be collaboration between fintechs and banks and other types of players in order for this to have the full-fledged value proposition. And then when you ask what will be the most difficult thing to do, I think what we must, of course, do as a sector is to understand this embedded finance topic. And it will, of course, be difficult to implement. But I think that is the key to be relevant at the fingertips of the consumer, because they are doing the commerce where they find it best suitable. And if we are going to be present there, we need embedded finance. So that will be the journey ahead, I believe.
I guess I just can second what Marina said pretty much. I guess there's no like blueprint solution for each bank. It's such an individual task or question you have to answer for yourself strategically. The important thing is that you do try to find an answer for that question, and ideally do that proactively and as early as possible, I guess.
Yeah, and just adding to that, I think my two co-chairs both have highlighted the most important aspects, and I think Marina touched upon that this will effectively change the traditional understanding of relationship banking. The traditional notion of relationship banking didn't actually capture the two-sided model that a true relationship should encompass. Whereas now with the digital wallet, with proper identification, with much more rich data sets and many more assets in play, you can actually build a much richer and stronger relationship between bank and client. But also to Cedric's point, that relationship might not be the relationship with a brand as we have usually thought about it, but maybe more with the services provided. So I think we are seeing a major refactoring of the entire financial landscape here. And to your question, Chris, about the major challenges for the banks here, I think it's to get their heads and first and foremost, their heads around this development and strategize properly, and then also adjust the organizations accordingly, because the new world will not necessarily fit the organizational structure of a traditional bank. So I think you need to rethink your entire business model and organizational structure.
Well, Marina, Kristian, Cedric, thank you so much for taking the time, and I can see that this is really a cutting edge type of development. I can see that you're all very passionate about the work that you're doing in the field of digital wallets. So we eagerly await the next report that will come out, the one you mentioned when you'll be talking about also merchant wallets. So we'll keep a very close eye on that. And until then, well, thank you very much for your insights.
Thank you, Chris.
Thank you, Chris.
Thank you.
Bye.